4.
Hello, everyone. Welcome back and welcome to our first panel discussion on today's event, Building Sterling as a World-Leading Green Bond Market. We've got a fantastic panel for this first discussion, who I will quickly introduce to you. We have Jessica Poulet, who is the co-head of policy and markets at the UK Debt Management Office. We have Mario Pisani, the Deputy Director of Debt and Reserves Management at Her Majesty's Treasury. We have Heike Reichelt, who is Head of Investor Relations and New Products at the World Bank. Jean-Marc Mercier, the Vice Chairman of Capital Markets at HSBC. And as always, in an office panel, importantly, we have a couple of investors to get the buy-side point of view. So we're delighted to welcome Owen Murray, who is Head of Investment Office for Federated Hermes, and also Laurie Heinold, who is Global Chief Investment Officer for State Street Global Advisors. Welcome to you all. Thank you for joining us for today's discussion. Very deliberately, today is a forward-looking thing. We don't want to spend too much time looking at what's already happened. But I think it would be amiss not to have a moment of reflection on the first deal that came in terms of the green gilts and the stunning success it made. As I say, we're going to frame this in its broader context of UK government policy, but also its impact on the green bond markets generally. But I think when you have £100 billion pounds of orders on a £10 billion deal, it is worth reflecting on how that came about, what went right, maybe also a little reflection on what might have been done differently. We have a lot of issuers and potential issuers, I think, of green bonds with us today from the sovereign community, and I'm sure they'll be all ears to hear the background to this before we move on to some of the broader issues. So this is very much a UK government programme, as we know from, and we just heard from John Glenn, the Economic Secretary to the Treasury. So firstly, if it's okay, I'm going to turn to Mario Pisani from the Treasury to talk to us a little bit about the background to the deal, how it was structured, the genesis of it, and also the Treasury's view on how it went and where it goes from here. Mario, over to you for now.
Thank you, Clive. And can I start by thanking you and OMFIF for allowing us the privilege to talk to this audience today. And I thought the minister's speech was really insightful just now. I mean, on your question, I suppose there's two core reasons why this was such a big priority for the government. One, because of the government's ambitious climate and environmental agenda, and second, as a way of enhancing the UK's leadership as a world leading green financial centre. So if I could have a minute on each, and I'll expand on both aspects of that. I mean, as many in our audience will know, the UK has for some time had some very stretching climate targets. We were the first country to legislate for reaching net zero. And earlier this year, with our sixth carbon budget, we got really ambitious interim targets too, before we get to 2050. The green agenda for the UK government is broader than just climate change. It's also about our leadership on environmental and biodiversity issues. And I'm delighted that the panel after this one later this afternoon is going to talk about those issues, including with Professor Dasgupta. And with those objectives in mind, we published the UK government's Green Financing Framework at the end of June. And that explains how the proceeds that we will raise through the green gilts, which is the name we give to our sovereign green bonds, but also a retail green savings product, will be used to finance green expenditures to help tackle climate change and other environmental challenges. The launch of the framework was very successful. Both investors and environmental stakeholders praised the level of ambition within it. And in particular, they praised us for some of the innovations that were introduced. First of all, the introduction of a world-first retail green product linked to the same use of proceeds framework as a sovereign green bond. Additional external independent assurance in the form of a pre-issuance impact report by the Carbon Trust on top of the standard SPO review. And commitments on social co-benefit reporting, as well as the expected environmental reporting. Second, as I flagged, this is a way to enhance the UK's leadership in terms of as a green financial centre. And that is by helping design and deliver financial services that are better, more innovative and more efficient. The green gilt can catalyse the issuance of sterling ESG bonds by non-government issuers. I think the UK corporate bond green market is relatively small compared to a lot of our peers, even though it's been growing recently. And with the UK's first green gilt our issuance equates to roughly half of all current outstanding green debt in sterling, and puts us, with this one transaction that Jessica will say a bit more in a minute, I'm sure, up there with some of the biggest sovereign issuers in the world when it comes to sovereign green bonds. On top of that, the retail product allows us a very unique way of engaging with citizens about this important agenda and creating, by introducing supply, you can create demand for these sorts of financial services, and hope that the financial sector overall will continue to develop issue them and develop them. And it's all part of a wider green finance strategy, which, as the minister talked about, is seen as do things on the taxonomy, on disclosures, also changing some of the objectives for the key financial sector regulators. So those are the two broader objectives, if you like: supporting our strategy on climate and the environment, and promoting green finance as a sector where the UK can lead globally. There's also a lot of debt management benefits, which we'll cover, and Jessica, I'm sure, will say a bit about.
Thank you, Mario. That helps really frame the discussion very well. Just a quick reminder to our audience that there is a Q&A function here. We've got a great panel. Do please post your questions to our panelists, and I'll be reviewing those and bringing them into the discussion when they come through. Jessica, let's go to you now. A lot of work went into that deal. There was, after a number of years, I think John said in his opening remarks, a number of years of speculation about when it would happen and whether it would happen even. Give us your reflections, if you can, on how it went and the key highlights, and also if there's anything that you in particular learned from the process of coming to market, doing a green bond for the first time.
So thank you very much indeed, Clive, for that very kind introduction. And also another big thank you from me, echoing Mario's, to you and your colleagues at OMFID for organising what is a very timely event, I think it's fair to say. It's an enormous pleasure to be here and to be able to discuss the future of the green sterling market, particularly with other distinguished issuers and investors here on the panel, at a time when the UK government has just embarked on our own green financing programme. And, I think I should say that for the UK government and for the DMO, alongside the very many people who have been involved in the planning, in the structuring of this transaction over months, as you indicated, perhaps even years, our debut green gilt, which we launched in September, without doubt represents a significant milestone. And I think it's fair to say that all of us in government, for sure, but also others, were really delighted with the outcome. We are now, and you alluded to this earlier, we're in the planning phase for our second transaction, which is going to have a 2053 maturity. We are expecting to bring that to the market very soon, subject to investor demand and market conditions. But this overall green gilt issuance programme, and indeed the government's overall green financing programme, which Mario has just mentioned, it clearly supports the UK's ambitious environmental and climate goals. And as you noted right at the beginning, and as the Minister also noted, it broke a few records in terms of size, level of investor demand, and so on. But importantly, the first green gilt also demonstrated very visibly the enthusiasm of sterling bond market participants for green assets. And we saw very diverse, very broad, and very high quality investor support for that transaction. Another really important point to note is the depth of market engagement involved in our green gilt programme, which is relatively unusual for the DMO in our standard gilt syndications. We held 2 global investor calls, one in July and one in September, and more than 2 weeks of investor marketing over the summer and then again in September to ensure that we communicated the key aspects of the framework underpinning the green gilt to as wide a universe of accounts as possible, both in the UK and internationally. And I think this engagement was genuinely welcomed by the investment community, and it formed part of a process which involved really thorough preparation. Not only in terms of our own work, of course, to ensure that all our systems and processes and so on were ready for the launch, but also in terms of preparing all the background documentation for the transaction, including, most importantly, as Mario mentioned, the critical framework document governing the UK's whole green financing programme, which was published in June to a very warm reception. And complementing this, we had a second party opinion and a pre-issuance impact assessment, an innovation in this market. And this suite of key documents, some of them are here, they're all publicly available on our website, and they allowed us to engage very meaningfully with investors and other key stakeholders in the run-up to the launch of the first transaction. And here I really would like to pay tribute to the very great efforts of an enormous number of people involved. Not only colleagues, of course, at the DMO and the Treasury and across government, but also the structuring advisors, the second party opinion provider, the pre-issuance impact assessor. There's also the legal advisors, the participants in the stakeholder discussion fora, the book runners, of course. The list goes on. Perhaps before looking at the specifics and the details of the inaugural transaction, I thought it might be helpful just to give a little bit of background from the DMO's perspective. Both the Minister, the UK Economic Secretary to the Treasury, and Mario have outlined some of the broad government objectives behind the green financing programme. But in addition to these, before we embarked on this programme, the government needed to be satisfied that a green gilt would represent value for money for the taxpayer, enjoy strong and sustained demand over the long term, and also be consistent with the government's wider fiscal objectives. So one of the overall aims of green gilt issuance is to raise financing for green projects in as smooth and cost-effective a way as possible, and also in a way which is fully in line with the government's debt management objective, namely to minimize cost over the long term, subject to risk. So in order to achieve this, it has been very important for us to consider the Green Gilt programme holistically in the context of our overall debt financing programme, and in particular, to integrate green gilts into the overall gilt programme. And we've done this in a few different ways. First, in terms of the structure, we wanted to make our green gilts as similar as possible to standard conventional gilts, which are, after all, one of the deepest and most liquid asset classes in the world. But we wanted to overlay this with the attributes now common to sovereign green bonds, such as alignment with the ICMA's green bond principles and so on. But from a structural perspective, the interest payments, for example, on the green gilt are in format exactly the same as those on a standard conventional fixed rate gilt. This means semi-annual interest payments, as we do on standard conventional gilts, and the repayment at maturity when the bonds redeem, of course, alongside the final interest payment, completely standard. And second, we also wanted the process to reflect our typical syndication process. Now, this involves engaging in wide market consultation with investors, and also our primary dealers, gilt-edged market makers, as we term them, or GEMs. Now, we do this regularly on a quarterly basis. And in this case, we engaged with them to select a maturity which best integrates the green gilts into the existing gilt yield curve. Hence the choice of the 12-year 2033 maturity for our first transaction. This complemented our existing gilt portfolio, and it filled a gap in that sector of the curve. And just recently, we again sought market feedback for our forthcoming second transaction, and we've selected the 2053 maturity, 32 years, for similar reasons. In addition to that, we also thought it was very important that green gilts are eligible for inclusion in key bond indices and that they can be traded in the repo market. And the Bank of England also announced that green gilts would be equivalent to existing gilts in their market operations. So while success is never guaranteed in these markets, all these factors, I believe, helped to ensure the optimal result for the government on the first issue. And importantly, this also includes, as we typically do for gilt syndications, providing guidance early to the market, well ahead of the planned launch, on aspects like maturity choice and specific timing to allow investors time to set up their systems. And on the day of the launch itself for the debut bond, we also followed our usual swift execution process for these types of offerings, with the whole book building process taking place very rapidly indeed, and pricing the transaction as early as possible. So it was this overall approach, I believe, which enabled us to achieve the result we saw on the first transaction, including a small greenium or pricing advantage, as well as a robust performance of the bond in the secondary market to date. And if you then turn to investor participation, we felt that our decision to issue at the 2033 maturity was fully supported by the quality of the investor order book, including a very diverse set of accounts. Now, investor demand came predominantly and perhaps unsurprisingly, given our typical gilt syndications, from UK domestic accounts, who are increasingly integrating environmental, social, and governance, ESG factors into their investment decisions. But the transaction did also successfully attract new investors to the gilt market.
Jessica, maybe just at that point, could I just, sorry, interrupt? Because while you're talking about the investor demand, I think it would be just great to get a little bit more feedback from that side, but also maybe first just to go to Jean-Marc. Obviously, HSBC was a structuring advisor throughout this process, but also a book runner on the original deal. You saw the book building, you saw the investor interest, Jean-Marc. Talk us through a little bit from your side about how this book maybe was different from others and how that hard work from the Treasury and the DMO paid off.
Yeah, thanks. Thanks, Clive, and thanks, OMFIF, for gathering a great panel and a distinguished audience. Thanks for having me for this hugely exciting development in the global green bond market. You keep talking about the sterling green bond market, but I think it's a global bond market. Maybe before going into the investor feedback, to complement what Jessica was saying, I'd like to come back for 1 second to the earlier conversation about the structuring of the framework and the transaction. So first, I think it was quite quick. When you think of it, it's just 6 months between announcing that the two banks would help the Treasury and the DMO to structure its framework, which is, a huge milestone in a country, and 6 months before it's going to be published. This is actually super fast when you think of many other sovereigns who took longer. The DMO sent the RFP to the GEMS in December, shows in January, and published late June. So that's super fast. And the second thing, as working on a transaction, working on a framework rather, is a coordination, which was excellent. Let me here praise the Treasury and the DMO, which drove the process. And if you, especially for outside parties, if you think that you need to, look at different second-party opinions, companies, choose one, engage with the stakeholders internally, and it's a government, right? So you have a lot of different sectors, ministries, and things like that, services, but also externally, which I think was quite innovative, with roundtables, engaging the green finance stakeholders. And that's pretty unique. Go through line by line the budget expenditures, as we call it, in details, to go through all the categories that you can use. And the country chose 6 categories to focus on, and then publish a pre-issuance report with Carbon Trust. And then at the end, yes, it's publishing a framework, but it's actually a huge piece of work, and just 6 months. If we come back to your question, Clive, and Jessica was talking already about that, the investor feedback, right? I think one is huge. I mean, the record number of investors listening to as we call it, the net roadshow, to the conference calls, the global investor calls, despite having 2. A lot of people actually listen to both and huge numbers, a large number of one-on-ones or two-on-ones, because we could not do just one-on-ones. And if I go to some of the questions, which hopefully the audience is focused on, that is, main question were in timeline for the UK taxonomy. A lot of discussions about the UK green bond standards, all the, if you will, the EU taxonomy has started, but the UK is looking at its own. There was a lot of detailed focus actually from investors on the project themselves to be financed, especially the three key categories I would call clean transportation, renewable energy, and the living on natural resources. And, you just mentioned already biodiversity, and one investor called it's fantastic progress on the peat restoration, to see that in the framework. Lots of questions on whether nuclear energy would be included, how was hydrogen considered, some of the discussions on obviously Cumbria coal mine and HS2. A lot of discussion on technologies which would be the most important for the net zero program: carbon capture and storage, waste to energy, again hydrogen, metrics that should be used. And as you said, Mario, a lot of interest on the green bond market innovations brought by the Kingdom. Social impact focus, job creation metrics, NSNI, the retail program, which is totally unique, and the role of the stakeholders discussion forum and the intense engagement you had with the stakeholders. And I would just finish with the many questions on issuance. To Jessica's point, is a green gilt the same legal documentation? Is a future overall amount going to be this amount or that amount? The eligibility on the APF, the indices inclusion, the maturity. And overall, I would quote a couple of investors. One is the greenhouse gas reduction trajectory of the UK is quite impressive. The other one was the framework is very impressive. It's very impressive to see what has been put together. The overall assessment for us is that this is a flagship sovereign framework. So I think, it was a success on the framework basis, and certainly a success, and we'll come back to it in terms of issuance.
Thank you, Jean-Marc. The questions are already coming in, so I want to just speed up this initial review process. So, Heike, I'll come to you in a moment. I just thought we should come to Laurie and Owen quickly to get there. We heard a lot about what investors were doing. Let's hear what the investors actually think. Laurie, if we can come to you first, just on this as a bond issue, the efforts that the DMO and the Treasury went to with their advisors to try to move the green agenda forward. And fundamentally, whether it's sort of the sort of deal that makes you more willing or more able to buy more sovereign green bonds.
Well, first of all, thank you also for having me today. I think it's really terrific to have this conversation and to be talking about this as a watershed moment in this space. And so congratulations to everyone who was involved in it. First of all, we've been involved in green bonds for a decade and a half, and we issued our first green bond fund almost a decade ago. So this is a space that's been around for quite a long time. But I think a lot of the things that coalesced in this moment that are really important to drive it forward is that establishment of the broad framework, the commitment of such large and significant issuers, the deepening of this space beyond traditional kind of hard currency types of bond issuance to other currencies for investors to take advantage of both the underlying credit as well as the currency opportunity. So in many respects, we actually see this as an incredibly positive development. And the other thing that I think that I would say is that, this has moved into the mainstream now. It used to be that people who were investing in green bonds wanted to invest in a green bond fund or were very, dedicated in their focus to green initiatives. And now we're starting to see that there's a lot more appetite to integrate these kinds of opportunities into the broad portfolio. And there is liquidity. There is a bit of a greenium, but on a risk-adjusted basis, we think appropriately so. And there's a lot more diversification. So very exciting moment for both the issuers as well as investors as we continue to grow this space.
Thanks for that, Laurie. We'll get back to some of those issues in a moment. Owen, I think I'm right in saying this isn't a bond that you would have bought as part of your portfolios, but it'd be interesting to know what you think of the process as well. And obviously, it's an area that you as an investor are focused on.
Clive, thanks. That's right. It's not something that we would necessarily have bought, not specifically running any sovereign bond mandates at present. However, let me add my thanks and also to the plaudits that you've heard. I think from everything that I understand of the deal, the framework, the use of proceeds, the innovation, all makes a huge amount of sense. The one extra bit I would contribute, and this might be slightly controversial, so who knows, but we're going to go with it anyway. It's a request. How about any country, or indeed corporate, that comes out with a net zero pledge? Why don't they link all of their issuance, sustainability linked issuance, to that pledge? We're under pressure from what we know from the IPCC's recent report. 1.5 degrees looks increasingly out of reach. What a great step that would be.
Could you tell us a little bit more about how that might work, Owen, before I move forward?
Well, so the UK government as an example, we know that in this financing year, a little over 250 billion worth of issuance, and we're going to have in total 15 billion in green bonds. How about the remainder? Obviously, much of it's already out, but how about the remainder, in fact, was in sustainability-linked bonds, so that they essentially the government is being held to its promises. What a great way to ensure that the nations that are making these net zero promises walk the talk.
Well, what an interesting early interjection, Owen. I'm going to come back to Jessica marrying that, but I'm going to come to Heike now. I mean, Heike, this is the idea of labeling that the stock of green sustainable bonds is something that we've spoken about before. I know it's something that the World Bank looks closely at. I'd like to get your views on that. I'd like to also ask you on your views of the deal. Obviously, the World Bank are pioneering green bond issuance, and you follow all markets closely in this regard. And I'd also like to maybe talk about sovereign green issuance or issuance from SSAs in the green space as a catalyst to future developments, maybe even leading to the sorts of future developments that Owen has just suggested. It'd be great to get your views on that range of subjects.
All right, thank you. Yeah, no, it's great to be part of this discussion. And I've already congratulated Jessica, but congratulations again. I can only imagine how much work went into preparing the deal, but you were rewarded by the excellent reception, so that's great. And listening to you speaking sort of took me back when we worked on the first green bond 15 years ago. We had to make sure that from a financial product, it looked and felt and moved just like any other financial product. So AAA rated, the credit risk is the same as other World Bank. But the additional aspect was really this transparency. And at the time, the World Bank was, had just published the first climate change action plan. We've just published another climate change action plan, but all this is I would say the legacy of this labeled bond market, which is transparency and issuer commitments. And getting to what we've discussed, Clive, the labeled bond market is what, 2% of the outstanding bond market. So it's negligible, but we talk about it so much more because it's such a great catalyst towards changed issuer and investor behavior. And the issuer of labeled bonds isn't only promising these commitments for that portion of their program, they're promising it overall. And Mario said the UK was already a leader in climate finance and had climate ambition, but now with this landmark transaction, it's really been brought to the financial markets and it's been absorbed. And the accountability of statements made in connection with bond transactions are just much heavier, whether you structure them in a bond or not. Sustainability linked bonds have with them another host of issues, but just the communication and engagement with investors is really fantastic to see, and I look forward to seeing what else is catalyzed by this transaction. And Clive, I'm happy to talk about the World Bank's advisory on sovereigns. How we work with the emerging markets. So I'm not sure if you want me to address that now or later.
Well, I think it's an interesting point. Maybe we could do that now, Heike, because I think it's very interesting. When you think about the effort that Jessica and Mario talked about to do this first bond, and it is a bit of a tangent, but I think it's worth addressing now. There are so many emerging market countries that maybe should be issuing in this market. but they're certainly not going to be building £15 billion green yield curves in a short space of time. But when we look at the amount of effort that Jessica and Mario and the team went into to do the bond, how can an emerging market sovereign actually sort of come to market in a similar way when clearly the demands are very high? But the impact would be higher, but obviously the proceeds would be less. What is the path forward on that? Can taxonomies like the UK's be ones that can be replicated elsewhere in the world potentially as one way forward?
The answer is yes. So the World Bank we have a sovereign advisory program, and we work with emerging market sovereigns to help them do exactly what the UK has done. So build the infrastructure around these labeled bonds, starting with national taxonomies, second opinion providers, regulatory guidelines, and so forth. So working with those governments, and many emerging market sovereigns have already set up that infrastructure, and some have issued green bonds. Some of the countries we've worked with include Indonesia, Malaysia, Mongolia, Kenya, South Africa, Morocco, Egypt, Jordan. So it's quite a long list. The most recent one was Colombia, and their local currency green bond was issued around the same time as the UK's. It did not get such a big reception. It was much smaller, but in terms of the changes and the accountability and the reporting and all that, it's all there as well. And I think, again, this is really the legacy of these labeled bonds, which is the reporting and the engagement with investors around purpose and climate finance.
Thank you.
Clive?
Yes, Laurie.
If I may, I'd like to pick up on this point as well, because one of the challenges for investors is to really understand this space. And one of the benefits of having some of these marquee issuances and all the effort and energy around developing the frameworks and thinking through these considerations of how to make this more similar to what bond investors traditionally invest in, that's great work, because it helps to sort of normalize a lot of these types of things. And to the degree that the emerging world, which, as you note, may be issuing smaller types of issuance, may not have the same amount of resource to dedicate to the efforts that it takes sort of across the board, the ability to take some of that content of those frameworks and apply it directly, that helps them, and it helps the investor community too, because there's commonality around what we're investing in, what it's intended to do, and how we're going to measure the outcomes.
I do sometimes feel a little bit sorry for the investors in terms of the number of taxonomies that you have to be familiar with. Is that a frustration, Owen and Laurie? Laurie, maybe first, in terms of, we've got Next Gen EU coming out probably this week, has its own taxonomy. You have the ICMA principles. We now have the UK ones. They've taken a step forward. Everybody has their own. Even within Europe, you have a French taxonomy, an Italian taxonomy. Does this make it more difficult for you as investors to really play the part that you would want in this market?
Well, I think it's a constraint, right? Because what it means is you have to dedicate a lot more energy, both as an investor and as someone who's facilitating those investments, in understanding what the nuances and differences are. And the other side of it is increasingly people are looking at the outcome measurement, the KPIs, right? And to the degree that the underlying frameworks are dissimilar or have nuances attached to them, it's much more difficult then to measure the impact. So I think the more that we can have some common framework, some common structure, taxonomies, those actually help both the issuer and the investor, because they create a playing field where more people are willing to participate, and there's less time and energy going into understanding those types of underlying considerations, and more time spent on the actual investments themselves. Owen,
your views on this sort of overload, perhaps, of information, but not necessarily the information that you want?
Well, furiously agreeing with Laurie, actually. It does make it slightly more difficult, but I think probably it's a good thing for end investors. It must be. And I wonder if to some extent also it represents, it's almost sort of a natural thing in that it represents market failure, in the sense that if markets don't get themselves organized, then you get regulation imposed upon you to fix things. And that gives you sort of slightly less control over maybe some of the unintended consequences that come out of that. But overall, anything that adds to transparency so that investors can actually see what's going on, it's got to be a good thing.
Thanks, Owen. Let me quickly circle back to Mario and Jessica to sort of unpack one or two of the things we've heard there. On the policy side, Mario, in some interesting comments from Heike, Owen, and Laurie there in particular, in terms of the development of the market. I mean, when you were considering this program, as you consider the future evolutions of the program, how much of that are you taking into account?
Absolutely, and it's a great thought. I mean, obviously, with our colleagues at the DMO, we always keep the range of instruments that we offer under review. And, we've been following the innovations from the big issuers over the last 5 years very closely. And, it seems that the innovation is happening all the time. I mean, I noted the comments from you, Owen, on sustainability-linked bonds, sustainability bonds. Clearly, the government, by its nature, has multiple objectives. Our green objectives are just one of the objectives that we have to follow. I can't really comment on the prioritization of objectives because that's a political matter. But clearly, we're very interested in the development of the social bond principles. We're waiting to see how those get further adopted. The EU program, the combination of social expenditures and green expenditures under one bond, that could be an interesting area. I mean, generally as well, in terms of the future of the green financing program, that's another key consideration here. We do think that our legal targets provide a really good framework for that, and our ambitious intermediate goals for meeting emissions reductions. I think the Committee for Climate Change have produced an estimate. Roughly 50 billion sterling a year is needed to get to net zero by 2050. Not all of that will come from the public sector. Some of that has to come from the private sector. Obviously, adding that up over the next 30 years gives you quite a big number. And being able to transform the economy from where we are now to a net zero economy over 30 years, and helping with that with some of the transparency that you introduce through these sorts of green bond programs, I think will be a good thing to do.
Thanks, Mario. Jessica, Owen's idea that basically all gilts should be green gilts. I'm interested to know what you think about that.
Well, obviously that is an objective to try and reach for over time, perhaps. But what we would just say, I just want to come back to the point that he raised, particularly on the sustainability-linked structures, which obviously have seen quite a lot of interest, particularly in the corporate world. Not yet, I think, in the sovereign world. As Mario mentioned, we do always remain open to looking at new financing ideas, but I think it's really important just to flag that the sovereign green bond market worldwide is still relatively young in terms of its development, relatively nascent. And one of the things that we felt was very important for investors, which is one of the reasons why we've taken the steps we have, is to try and ensure that the liquidity characteristics of these bonds that we're issuing are comparable with our conventional gilts over time. And that's something that we heard consistently in terms of feedback from investors during the process, and why we were particularly pleased, for example, in the September deal to be able to offer a sizable transaction to try and ensure that. And I suppose a concern could be that if you try and bring too many new products, you could risk fragmenting the market, and therefore perhaps, the liquidity issues which I referred to could potentially be compromised if you did that too early. But I completely agree with you that we should remain open to all of these new developments which are taking place. And in terms of catalyzing the market, because that's one of the things that I think this panel was particularly interested in, I think one of the things I was really encouraged by just in the last few days is that the EIB, for example, launched just last week their first sterling sustainability awareness bond. And this not only covers climate change mitigation and biodiversity, but like our own green gilt, it also encompasses some of the social aspects, which of course is one of the innovations that we have brought here. And I think that's important to note. So, the other thing that is obviously going to be really important, and Mario as well, and others have pointed to the £15 billion that we're going to be issuing by the end of this financial year. We've obviously got the one that we've done and also the one in October that I've just alluded to. What ultimately is going to determine the programme is the green projects and the assets underlying the issuance. And that is clearly, for all sovereigns, fundamental to how the programme looks over time. But obviously, aspirations for the entirety of the programme are very well taken. And as Mario mentioned, the government does have these extremely ambitious targets, which are now set out in legislation. And I think that is something really positive in terms of the UK's overall commitment to the climate agenda.
Thanks, Jessica. The questions, I hope, are flying in. So I'm going to break from our planned strategy of discussion just for a second to bring a couple into the discussion. I have one from Alan Wild here at Trafalgar House, who says, unless there are penalties for non-compliance, this form of government issuance is opportunistic and greenwashing. The proceeds must be hypothecated and coupons must rise according to non-delivery on KPIs. Presently, investors are making life too easy for issuers. Let's go to the investors and ask them for what they think of that. Owen, you go first, please.
Well, I think in this instance, the work done by Jessica and team mean that we can see an impact report. We're going to see use of proceeds reports on regular bases, and we know the timeframes in which this money will be used. So I'm sort of relatively optimistic for this issuance, at the very least, that we've got sufficient transparency that we can, I think we can be confident that there won't be greenwashing, or the likelihood of greenwashing is significantly reduced.
That is obviously the aim of the program. I guess the proof of the pudding will be in the eating, but the intention is there. Laurie, just to get your
look, this is always the classic question, right? Is how do you actually evidence the outcome? And I think the first thing I would say is that the most important thing that investors always care about is the financial results, right? Are they going to actually get their coupon? Are they going to get their principal back? And did they get an attractive consideration for that? So that's always first and foremost, even in this space for most investors. But again, I think it comes back to the points we were making earlier around how important it is that there's a framework, that there are large reputable issuers who are embarking on these programs, that there is more sort of teeth in how these things will evolve through time. And investors will vote with their feet, right? If they find that they're not getting kind of outcomes, that they're actually getting greenwashed or they're having something else happen, maybe the first time you fool me once, but you fool me twice, like shame on me. So I think there's a little bit of the self-policing that will go on as well.
What about, we'll talk in a bit about the future of the sterling market and building the yield curve and building the issuer base. But if I'm a reasonably sized UK corporate thinking about doing a green sterling bond, do I have the resource to provide the same level of granularity and information that Alan was suggesting there that he needs? Is that actually feasible?
Look, in some ways, the actual dedicated green bonds from corporates are easier in the sense that there usually is a lot of specificity around the use of proceeds, right? And so from an investor standpoint, you can do your due diligence through the lens of that use of proceeds. What becomes trickier, I think, is as we get these more sustainability linked bonds, or we go to other places where it's less specific how those proceeds will manifest in the outcome. But again, in all of these cases, you have to do your due diligence, you have to hold these issuers accountable, and ultimately the development of frameworks, the development of KPIs that are consistent across will be a positive for markets.
Thanks, Laurie. Let's get another investor view from the audience. And we have a question here from Dan Waters of Vanguard. And he says, echoing Owen Murray's challenge, what's the panel's view on how to achieve real impact and scale in green sovereign bonds, given the relatively small footprint in the wider market of these bonds at the moment? It's clear we're running out of time. Heike, I wonder if you could address that with your bigger view that you have from the World Bank on this.
Sure, and I was going to come in on that a little bit earlier. The labeled bond market, as I said, is tiny compared to the overall bond market, but Jessica alluded to this as well. There's a mainstreaming. Investors are already incorporating environmental, social, and governance criteria in all their investments. Whether an issuer labels their bonds or not, they are being asked these types of questions. And from the World Bank perspective, when we issued the first labeled bonds, there was great success and a lot of interest, but we saw over time that the focus of investors was getting narrower and narrower. And it was, for us, this was not enabling us to show the broad range of things that the World Bank does. Every project we finance is with a specific positive impact in mind. That's why we exist. And we have social goals. So what we've done is we've used a bond, sustainable development bonds, and we use that to engage with investors around certain themes in all different currency markets, including sterling. And just a few weeks ago, we actually launched an initiative to highlight how climate co-benefits are in almost every single project that the World Bank finances. And this is something that we announced, that we'll be raising $10 billion of sustainable development bonds and engaging with investors around how we can no longer silo green and not green. We have to look at everything and see, what potential is there for mitigation, and how can we make projects more resilient? How are we using water? What effects do projects have on biodiversity? So taking this holistic approach. And I think that that's going to be a development in the markets because of this engagement with investors. We've talked about it a lot. Issuers talk to investors about everything, not just the very narrow portion that they're allocating an equivalent amount to as part of the label. So we've already, labeling something is just the start, and it is going to expand to everything, whether the financial products are articulated in that way or not. And the expectations of investors and the outcomes, the way to bridge that is through transparency and reporting. And that's where I think most of the focus is going to be going forward.
Thank you, Heidi. I'll come to Jean-Marc now with another question. We're hearing about. Yes, sorry, Jean-Marc.
No. Go ahead. I know. I was.
Well, I'll let you answer this one and the one you were going to answer anyway.
Yeah,
that's right.
Please go ahead.
So we have a comment and a question from Xavier Pujos here, and he says the UK will issue green bonds regularly. The EU is launching an even larger tranche this week. Spain, France, Chile, Canada, Korea, Colombia. We heard also issuing sovereign green bonds. Multilateral development banks launching theirs. Is there a risk that this market may saturate at some point, or that the market bifurcates away from traditional sovereign issues into primarily ESG sustainable bonds? That's something that you'll be looking at as a bank. All of these people are clients of yours on both sides, on the investor side and the issuer side. How do you see that, Jean-Marc?
No, that's a great question. That's a dream, right? If we could move all the financing to green financing, that means we are there. Right? We are on the right road to go net zero in 2050 or even earlier. Today we continue to finance, maybe do no harm, but we're not really transitioning the economy. We're not transitioning everything we do to green. So that's where we want to go. So we're just starting. But I was curious to comment on that. In 2021, in the standing market, we saw a massive change in the corporate side. We speak about here about sovereigns, but if you think that in 2020 we had 11% of the corporate market in sterling to be green, just call it 10%. But in 2021, and thanks to the signaling that we've got from the Treasury and from the DMO, we're now at 45% year to date. So it's a massive change, and we went from 10 transactions to 32 transactions in just a year. So clearly, if we are almost 50% of the transaction being green in some shape or form, it's sustainability or green, that's a massive change. That means the whole market is moving towards this. That's exactly the point. And if I put my ICMA hat for a second, I think the structure that ICMA managed to get really globally everyone to agree on, use of proceeds and evaluation and selection and management and reporting. This is a superstructure that everybody agrees on. Then you can have slightly different taxonomies here and there, but globally, we all agree how it should look like. And that really helped spur the growth of the last 10, 15 years.
Thank you, Jean-Marc. Jessica, I want to come back quickly to the pricing and the greenium. And I know it's sometimes a sensitive subject, but you said at the start, these are very much, gilts, just as a standard gilt is a gilt, a green gilt is a gilt. So when you're in the market, you would normally, apply the logic of supply and demand. And if demand is that high and you have a certain amount of supply, you will price as tightly as possible. So when people talk about the greenium, this is just the market rate that you're going for, isn't it? Is it a slightly false argument?
Well, is it a false argument? I think the key point is exactly the point that you've noted, Clive, very, very eloquently, which is that there is a lot of demand at the moment for green assets, and specifically for green sovereign assets. And we have seen that in the Eurozone with the other sovereigns who've already issued in the Eurozone, whether that's France, Germany, Italy, Spain, and so on. And they have all in the Eurozone managed to command to greater or lesser degrees this pricing advantage relative to their conventional curves. So clearly, and that is in the Eurozone where there has been, a relatively, comparatively compared with sterling, of course, large amount of supply so far. Now in sterling, we were the first sovereign green bond. So that I think is perhaps what explained the really unprecedented levels of demand that we've talked about on this panel. This was the first time that investors, and this is a large bond market, the sterling bond market, it is a liquid market, it is one of the deepest markets. This was the first time that investors, whether they were standard gilt market participants or whether they were specific ESG investors, the first time that they had the opportunity to buy an ESG, a green sovereign asset. And that, I think, was perhaps what drove these record levels of demand. That, and also, as I mentioned, at some length at the beginning, the preparatory work that we took all together to ensure that we were best prepared and in terms of being able to respond to investor inquiries and so on. And I think that as a whole was why we were able to price it at the level that we priced it at, which did represent an attractive level, a greenium, a pricing advantage relative to a conventional gilt. And I think obviously as time moves on, we will see how this relationship evolves. But as Jean-Marc also noted, what we are seeing increasingly, and I think this is going to be the case going forward as the Task Force of Climate-Related Disclosures completes their work and so on, we're going to see increasingly all investors, whether it's here in the UK, but across different groups, needing to be much more sensitized to ESG factors when they make their asset allocation decisions, which is one of the reasons why I personally am extremely positive about the future trajectory of this market.
Thanks, Jessica. I'll go back to the greenium. Owen, the primary market seems to be the place where reallocation happens. It's not the secondary market anymore. Can you talk to us a little bit about that? Because I know it's something that you're very interested in. But also, is there a danger if greeniums get too big, then that actually potentially might limit that reallocation through the primary market because pricing just becomes, too expensive effectively for people to think about reallocating?
Yes, I suppose that is one possible outcome, Clive. But I would imagine that as this market expands, as Jessica said, right now demand vastly outweighs supply, then we might see that greenium decline. I mean, I think one observation would be that the current greenium probably is not some sort of discounted view of about sustainable future outperformance. It's something different than that. But to go back to your point about the capital reallocation, if you think about, there are sort of effectively two ways in which we can change the nature of the economy. One is the reallocation of capital, and the other one is engagement of existing capital to change expenditure, CapEx. My view would be in the secondary markets, particularly the equity secondary markets, you really are, the only option you have is engagement. There is no real capital reallocation going on at all, because if I sell a position today, there's another buyer out there who takes it off my hands, no real economy effect. However, in the primary markets, principally the bond markets, the fixed income markets, that's where real capital reallocation happens, which is why I think it's so critical that we get this point right in terms of both green bonds and their sustainable linked cousins.
Thanks. Laurie, do you echo Owen's views on that?
Look, I do. And I think one of the things that's different versus a decade ago is that there already is a certain amount of mainstreaming happening, right? So it's not just green bond funds that are buying these issues, it's broader benchmarks that are buying these issues. And in fact, I would argue that the conventional allocations and conventional benchmarks are better ways to access some of these types of opportunities, in part because the green benchmarks are so susceptible to changes based on one or two large issuers that happen, right? The characteristics of that benchmark in terms of maturity, stratification, credit, et cetera, could be changed pretty markedly by one large issue. So in some respects, as an investor, there's a benefit to having it embedded in your larger portfolio. The other thing that I think is really an important issue is this question about the greenium, right? So some of it seems to be at least driven by supply demand dynamics, but some of it may also be about quality and accountability. We've seen a similar dynamic in equity markets, for example, where companies that are more focused on ESG issues and manage those ESG risks effectively, they actually generate long-term better risk-adjusted returns. So there may be something echoing here in the bond markets that's analogous to what we see in equity markets.
Thanks, Laurie. Just going back to the green plus concept, I think this is a very important thing, and I think it's something that's very much at the heart of what the UK Treasury and DMO have tried to do. And we're going to have a panel discussion later looking very closely at biodiversity. Mario, can you go into a little bit more detail on biodiversity? I mean, it is not an obvious thing to include in something relating to finance, is it? It's not an easy measurement. It is not something that's traditionally been part of the financial world. Why biodiversity, and what did you discover as the best ways to go about this?
It's a great question, Clive. And don't get me wrong, the whole process would have been easier if we narrowed it to just climate-related expenditures. But we have the category right there in the framework, one of the 6, living and natural resources. And just to say a little bit, and this came up earlier in the discussion with Laurie and others, that one of the challenges for us in government is that our assets, if you like, our expenditures are quite heterogeneous. So, we're mixing together a load of different things that are happening in the UK, things that are happening abroad, expenditures on physical assets, also R&D type expenditures. So there's a lot to go through, a lot to assure ourselves on in terms of which categories are they within, are they going to meet the right thresholds, and also in terms of some of our exclusions, because there's some very well-known environmental related expenditures that a lot of people would think don't actually do very much for the environment. So we need to make sure that for the things that we will finance, they contribute to the broader set of objectives that the government has in the environment. But I do think it's really important, and I think also it is public knowledge that the government is taking forward legislation to create targets on the environmental strategy, just like we're doing on the climate strategy. And it's something increasingly where I think there's a lot of synergies between the climate side and the environment side. For example, on the technology space, some of the biggest environmental damage problems that we have could be fixed through a combination of changing social norms, changing human behavior. But I think technology is hugely important. So when you think of things, some of our big innovation funds that are there to fund, take risks with some of the technologies on both climate and environmental ideas, I think that's a great way to get in across both. But, I don't want to say lots more because my colleague, Dominique Lamb, is joining the next panel. She's going to tell you lots more on this in a bit.
Okay, Mario, thanks for that. But Heike, I wonder whether you can let us know, do you think that this is something that could become relatively standard as a part of we talk about green bonds, but also we talk more these days about GSS bonds, sort of green social and sustainable bonds. Do you think this could be something that becomes rather standard in the market?
Yes, we've been talking about sort of going beyond green and moving towards, as I explained earlier, these sustainable, in our case, development bonds concept. And I was especially happy to see that the UK included social co-benefits in their impact reporting and also mapping to the Sustainable Development Goals. That's something that we started to do because we think the Sustainable Development Goals are a nice framework, and we know that the private sector is using them for their own reporting to stakeholders. It's a nice framework to show how, as Mario said, projects touch on many different things. Green bonds in the most narrow concept are really just renewable energy and energy efficiency. But even with the World Bank's first green bond, we included adaptation. But the world is realizing that we need these resilience and adaptation investments even more now because we're seeing the effects of climate change. So this green plus, the recognition of the loss of biodiversity and the effect that that has, again, on people, I think is one of the very special aspects of the UK's green bond that it brought to the market. And I think, as I said earlier, I think it really is such a landmark transaction that brings the market forward. And this green plus concept is something that we very much have also been trying to articulate in the markets, that, you know, you cannot look at things again in silos and just say it's only about renewable energy. Green and social has to be in everything.
It's very interesting. There was a report I was reading in the newspapers today about the UK has lost, I think, 47% of its biodiversity since the Industrial Revolution. So, you know, these are pressing issues right now. And we're coming down to the last 15 minutes. So just a reminder to the audience. Yes,
before you move on, you know, we have now huge trends and very successfully going to net zero as a concept and now being rolled out by maybe institutions. You know, some of those will not be able to do zero emissions, right? They'll be net zero. So you need to create this offset capacity. And I think the biodiversity will come to that, to be about trees, will be about, you know, not just trees, but nature. So I think that's why biodiversity will become a huge topic in coming months, coming years, because you need that offset capacity. We need to create, recreate, or develop, or save this biodiversity to ensure we can offset something. Because that's something we're not going to go absolute zero. We're going to do net zero.
It goes into the challenge, of pricing of assets. We're not pricing in nature or the destruction of biodiversity properly. So I think that's going to be, I agree with Jean-Marc, that's going to be a big topic about how, you know, there can be more developments in helping investors price these types of benefits and costs in their decisions.
Do you have any views on how that might be achieved, Heike?
I mean, there's a lot on sort of wealth accounting. The World Bank has worked on that a lot. I think sovereigns play a big role. And I'm looking forward to the discussion later today on biodiversity. There are a lot of discussions and a lot of concepts, but I think the challenge is really integrating that into financial models.
Laurie, is this something that you guys are looking at?
It certainly is. And I think many of the panelists have highlighted some of the benefits that we could all get. I mean, certainly something like a formalized carbon pricing structure would be the one mechanism, because it would make quite clear what the costs are to these kinds of activities. As you can all appreciate, though, you know, defining what a particular company or sovereign's footprint is vis-a-vis carbon is not an immaterial exercise. So that remains, I think, part of the challenge. But I think the fact that we're talking about this is part of the solution too, because there are lots of great minds that are focused on these issues, and markets do ultimately help drive behavior. So the more that we can start to create the transparency that's required, and then put in place the appropriate amount of, you know, infrastructure, regulation, whatever words you want to use, the better off it's going to be for issuers and investors, because we'll now understand the complete picture, not just just the financial dimensions of it in the immediate day and age.
Oh, and it seems like a long time ago that we were first discussing things like carbon offsetting and the price of carbon and so forth. I don't think it ever really got where it was meant to go. We got more chance this time around, do you think?
Let's hope so, because we absolutely need to get it right this time. I suppose going back to something that Jean-Marc said earlier, we already have land-based and ocean sinks that are good for at least 41% of our emissions. So how about we go further down biodiversity programs that regenerate some of those and scale them up? That to me seems like a very good use of proceeds that we could be doing. Jean-Marc mentioned planting trees. Yes, that's part of it. But good old whales and plankton, they can do a lot more than trees. So there's so many opportunities out there for us as investors. It behooves us to really get into the biodiversity footprints of the investments that we are making to understand the components of the loss.
Thanks for that. We're coming down to about the last 10 minutes now. So if there are people out there who want to direct questions to the panels, do let us know. I want to focus a little bit more now on the future of sterling as a green bond market. Jessica, at what point do you think there'll be a fully fledged green gilt curve that the world can reference and price off?
Well, as you probably are aware, the Chancellor committed to building out a green curve in coming years, and we have just embarked on that process. So we've now got a point at the 12-year point, which as it rolls down the curve, and we do this, by the way, for our standard gilts as well. We quite often issue slightly longer than the benchmark to allow them time, to mature, as it were, build up and then become actually benchmarks at that key point. And as I already flagged, we will be doing that, and this is likely to happen relatively soon, also at the 30-year point. So with a 2053 maturity, again, that works quite nicely and symmetrically with the 2033. So we will then have benchmarks at what are probably the two most traded points of the gilt curve, so 10 years and 30 years. And I think if you were to ask market participants, maybe Laurie and Ewan might have views on this, but those are the two sort of key points on the curve. So yes, we're just starting, but I do think that these transactions will, the one obviously that we did in September, but also the one in October, will be very good starting points for this. And of course, the other point to note is that we ultimately, it's going to be, and this has also been discussed very in some depth on this panel, but ultimately it is the green assets which underlie the issuance, which will drive the program going forward. But I think, it started off in a very positive way. We have got this commitment to issue at least 15 billion this financial year. And I think by having these 2 points on the curve, it's a good start.
Mario, from the point of view of bringing more corporates and non-sovereign issuers to the market, are there steps that the government is taking? Is the encouragement, should the encouragement of this program be enough to make them want to come in, or are there other steps that the UK government can take to bring more to the market? I mean, Jean-Marc said we're seeing more, but I think we're still seeing relatively little compared to some other markets.
No, I mean, that's a very fair point. And I think the minister also made some points around this, as did Mario earlier. As I mentioned already, I was very encouraged by the EIB's first sustainability awareness bond, which just came a couple of days ago. It was at a shorter maturity, but the structure was not only covering climate change mitigation and biodiversity and ecosystems, but it also encompasses the social co-benefits. And we've discussed the importance of the social co-benefits of the green expenditures financed by this green gilt, like job creation, access to affordable infrastructure, socioeconomic advancement, in addition to reporting on the green expenditures and the environmental impacts. Now, this innovation, and I think it really is an innovation, and colleagues on the panel have kindly already testified to that, I think that is something that we are going to see increasingly, not perhaps just in the sterling market, but as Heike mentioned, in the ESG market globally more broadly. And I really hope that that's a positive step that the UK can really bring to this market overall.
Mario, just to bring you in on that quickly, and then I'll come to you, Jean-Marc.
Yeah, sure.
I mean, obviously, just by coming forward with such an ambitious program, that demonstrates a commitment to the ESG market. Obviously, we're adopting slightly stricter commitments on the reporting with the social co-benefits and the frequency of all of that. And as I said earlier, we have to report on a lot of stuff because of the nature of the assets that we have compared to a corporate. I mean, obviously, we're also developing the taxonomy, and I know that's slightly uncomfortable at the moment, as Jean-Marc said earlier, because we're going forward with a big sovereign issue while the taxonomy is still being developed. But I think other issuers did the same. We've taken a lot of feedback from stakeholders on that. We set up a technical group as well to advise the government, and we're also, this came up earlier. Can we achieve a little bit of, making sure that the various taxonomies speak to each other, and the UK is part of the international body which is trying to ensure that happens. If I look forward to 3 years from now, with the UK taxonomy out there, with some specific things for us, but interplay well with the EU taxonomy and others. A green financing program doing well. People really pleased with the social co-benefit reporting that we're doing. I think that's a great template for corporates to use to come forward with their own issuances.
Jean-Marc, over to you, and also to get your view on that pipeline, obviously of potential issues that's coming through.
In a compliant manner. No, look, I mean, we documented earlier, Jessica spoke about the new demand that we saw out there, right? New investors, almost twice as much international investors into the Green Gilt than usual on syndication. We saw new names come in, and then in secondary actually traded extremely well. It did perform. I mean, we saw at some stage -5 basis points. So Corinium actually almost doubled at some stage. So I think Virtu is being rewarded. That should really attract new issues. There's no question about that. And one little bit of anecdotal evidence, we came with the Green Gilt on a Tuesday 21st of September. Just a few days later, the KfW came with a Sterling Green Bond tap that was just on the Friday, and we saw actually huge demand for that transaction. We printed 750 million pounds of that tap. So I think that demand out there that is now evident should continue to attract new names or existing names and to more in the Sterling market. And I told you 45% of the corporate transaction in 2021 were green or sustainable. So that's a huge change. I mean, I don't know of any market where almost half of the market is with the label. So huge progress.
Yeah, very encouraging to hear. Heike, does the World Bank can issue in many currencies? Does the developments that you see in the green sterling market change at all the World Bank Treasury view of the sterling market?
Actually, UK investors have always been very engaged on ESG issues. So we've had very good discussions with UK investors on those topics. And we've issued sustainable development bonds in the UK market as well. Yeah, I mean, as part of this initiative for 10 billion US dollar equivalent, we're also hoping to issue some sterling sustainable development bonds as part of this engagement with investors about co-benefits, climate co-benefits being in all of our projects.
I'm guessing, as unfortunately in the virtual format that it will be, but at the World Bank IMF meetings in the days to come, this will be a big topic of conversations in the meetings that you have as well.
Yeah, as part of this initiative, we've already had in the last 2 weeks almost 50 investor meetings and investor engagements, and we're continuing with this. And yes, in every banker discussion and discussions with investors, I'm sure that this topic will come up. And I'm happy that I know so much more about the UK Green Gilt now to bring that into the discussion.
But before I go to Jessica, just for a final comment on the deal that's coming up, I would just like to get Laurie and Owen's views as we round off the discussion in the last couple of minutes here. Do you take a positive view of this as we come out of this discussion in terms of where we're going forward, Owen?
Yes, I do, Clive. It's I think that the least we can say is this is a really encouraging development, and I'm very optimistic that there's more to come. I think the bit that I find most pleasing is it's beyond simple climate. We know that we have already transgressed 4 out of 9 planetary boundaries, 4 out of 9. And world-renowned climate scientist Johan Rockström said that climate change was probably the easiest one to solve for. So great to hear discussion around biodiversity, and conscious of what's coming up next in the agenda. There's just so much more to do and to make this an even bigger and richer market.
Thanks, Owen. Laurie.
And I would echo everything that Owen said. I mean, clearly green bonds will play a pivotal role in the transition to a more carbon-free future. The bond market is more immediate in many cases than the equity markets. There's just a lot more issuance. It's more frequent. You have the ability to actually drive those proceeds to invest in the future that we're all trying to achieve. And more investors and asset managers are committed, right? We've all signed up to, or many of us have signed up to net zero commitments of whatever sort. And these are great mechanisms to help us all fulfill that promise.
Thanks, Laurie. And just finally, we've got a couple of minutes left. Jessica, just to flag what's coming. As you said, a longer dated issue. I think there are going to be a lot of UK pension funds very happy to hear that. But anything else you can quickly tell us in about 90 seconds on the deal without breaking any rules that you should be breaking?
Absolutely. I'm pleased to say that we have already, in line with our normal process, actually made some announcements on this deal already in the public domain. So I can tell you that the new Green Gilt is going to have a maturity date of the 31st of July, 2053. that subject to investor demand, subject to market conditions, the transaction is planned to take place next week. That's the week commencing the 18th of October. We have also announced the lead management group, the joint book runners, that was just done on Friday. As usual, it will be, we would anticipate that all our primary dealers are invited into the syndicate for that transaction. So as on the first transaction, we intend it to be as similar as possible in process to our standard conventional gilts. And I hope that others will follow the developments as they evolve over the next couple of weeks.
Thank you, Jessica.
You very much.
Thank you to all the panel. And we're going to have a quick networking break now, chance to refresh. And then my colleague John Orchard will be interviewing Partha Dasgupta, who, as we know, was integral to a lot of the efforts around biodiversity through the report that he published through the Treasury last year. But to all the panelists, thank you so much for your time today. A great discussion, and look forward to seeing you all soon. Thank you very much.
Thank you.
Thank you, Clive.
Thank you, Clive. Thank you all.
And then Ben will tell me when we're